welcome our next guest is Todd Schweitzer, the CEO of Brancas. This is an organization that is all about open banking, really connecting organizations to people in the way they want it to be connected. He has a regional operation working with many of the region's financial institutions, but he himself is based in Philippines because he sees big opportunities here. So with an interesting story and an interesting fellow, please welcome Todd Schweitzer of Brancas.
Thank you so much, Richard, and good day to everyone. Thank you so much for the opportunity to share just a few minutes on open finance and the opportunity for fintech ecosystem development in the Philippines. As Richard said, I'm based here in Manila. It's really heated up as a hub for fintech innovation in the last year or so, and it's been really exciting to be witness to that. But Brancas is actually a regional company. So we launched first in Indonesia in 2016 and have since expanded now in the Philippines, as well as Vietnam, Thailand, Singapore, and more to come later this year. So first off, I want to share this chart because I think it sets the scene. Southeast Asia banking customers are underserved very transparently. In fact, in the Philippines, less than 50% of adults have a bank account. And even among that 50%, a minority of them actually are able to use their bank account day to day for banking. I mean, many of them just use it and withdraw funds, and they're not able to develop a credit history. They don't qualify for loan products, or at least not in an efficient way. And so there's really an opportunity for non-bank and neobank participants to actually serve those customers that have been underserved by the incumbents, frankly speaking. Open finance is based on two main principles, from my point of view at least. Number one is that customers should own their financial data, which means if I develop a transaction history with a remittance company, or I have my payroll history passing through my bank account, I should be able to easily share that data with a third party for the purposes of credit scoring, for the purposes of applying for a mortgage. I should be able to easily access that. And easily accesses means electronically, digitally, with my consent, I should be able to share that data with a third party. Identity data too, which is in the Philippines, of course, there's new developments with online ID, but still most financial products, you have to go through a full know your customer KYC process. So being able to share my identity information in a secure way is really an enabler. Number two, customers should be able to access their financial products beyond bank-owned channels, which means if I live out in a province where there's only one bank that has a physical branch, I should still be able to access my bank products online without necessarily needing to log in and register to the bank's app or go to a bank's ATM. I should have flexibility in how and where I access the products that I've signed up for. And it's worth noting that this is directly supported by the BSP governor, Diokno, who pointed out in August of last year that open finance enables affordable services that fit their needs and promotes consent-driven data portability, interoperability, and collaborative partnerships between financial institutions and fintechs. And so that's what open finance is really enabling. Okay, so now for definition. So open finance in the Brancas definition are technology, products, and policies that enable customers to securely use financial services from qualified third-party providers. This changes the whole economics of financial services. Number one, it changes the way financial products are developed because now a bank, instead of building a digital app, they can connect an API to a fintech partner who can actually build that app and attract those customers on the bank's behalf. Number two, it changes the way financial products are distributed because now instead of building a physical branch and running cash trucks, you can actually plug in partners who can do the onboarding on your behalf. Number three, it changes the way financial products are monetized because now banks can offer new revenue streams like subscription, usage-based fees, platform fees. You were seeing many banks build something of an app store to support to support third-party financial products to their own customers. So what does this look like? This looks like API providers, which could be a bank, it could be an e-wallet, it could be a remittance company, it could even be a telco. They're the ones providing the financial services or the data available via API. And then there are API users, who are the businesses or the startups or the apps or even other financial service providers that are connecting into those APIs to provide customers more choice on which financial products they can access. Now, this is where Broncos plays a key role, because we are aggregating that technology to provide a simple pipe where those API providers can easily connect with API users without each of them connecting one by one. So it's aggregation, but it's aggregation using secure APIs that's compliant with the BSP, with the National Privacy Commission, and other bodies. And there's a lot of kind of interesting tech behind the scenes that we could go to another day. In the next slide, I share the Broncos product ecosystem, which basically consists of publishing products to help financial institutions launch open APIs in about 8 weeks. And then our API aggregation products are mainly these are the main use cases for open finance in the Philippines, which are payment APIs for both domestic payments and remittances, data APIs for things like statement and identity verification, and even income and expense categorization, and then product APIs, which are actually product origination workflows end to end, like account opening through a third-party app, like what Gcash does with CIMB, where I can open a CIMB savings account inside the Gcash app. As well as other issues and products like a Visa card issuance that we've recently launched with Visa as their APAC open banking partner. This is an example of the recent lending partner where the customer gives consent. They demonstrate that they're the account holder at BPI, and then they authorize sharing of their BPI transaction history back to the lender so that the lender can score them. This is an example of payments API with Tonic Bank. Tonic is a digital-only neobank where they use Broncos to pull funds from their BDO account into their Tonic account. So inside the Tonic app, I can link my BDO bank and I can authorize a pull payment. For example, on payday, I can move my funds into my Tonic account where I'm earning a higher exchange rate or a higher interest rate and able to use Tonic Bank services. A couple other examples. In Singapore, there's a national ID called SingPass, and I can actually now use my SingPass to log into a bank app. So I don't have to use another type of registration. I don't have to go through another KYC process. I can just use my SingPass to go through the registration for a new bank account. Statement aggregation also works for corporate account data, for example, for accounting use cases. And then the last one I want to show is Tokopedia in Indonesia, where they're actually aggregating SME lending so that Tokopedia merchants can, all within the Tokopedia e-commerce app, can access SME financing products. So these are just a few of the different ways that open finance can enable product linking inside third-party apps and give more choices to customers. And that's what Broncos is all about.
Thanks, Todd. I feel bad that I'd like you to go into a lot more detail about this. There's a lot of deep material you are doing across the region. Now, Todd, there's, it can be confusing a bit, but the kinds of banks, let's say, that you are most dealing with, I mean, you mentioned BDO and so a neobank, I think you called it. Is there a certain category and type of banks? Are they mid-sized banks? Are they micro banks? What do you most?
It's a great question. Different banks have different reasons for participating in open finance. So the large banks already have the customer base. They already have the customer data. And so it's about being able to further monetize their existing customer base. So for example, the top 3 or 4 banks, their customers would love to use their bank account for easy e-commerce checkout, right? So that on a leading e-commerce site, they can just link their bank account at checkout and then offer a pay by bank feature, right? And that's an easy way for the banks to monetize, because actually it's a zero cost transaction to the bank. It's just a movement of funds from the customer's account into the bank account owned by the e-commerce site. But for the bank, they can charge something that is much lower than, for example, a credit card or over-the-counter payment. But they can charge directly and start offering e-commerce checkout options. That's just one example, right? They can also offer KYC, right? So identity as a service, so that I can use my e-wallet or my large bank account as a way to to verify my identity when I'm logging into a third-party fintech app, right? Now, that's for big banks. For smaller banks, it's about being able to play a different game. So rather than building branches or rather than building new mobile apps, they can actually acquire new customers and serve those customers by partnering with fintechs. So the whole old way of customer acquisition and marketing and reaching a customer base online, you can do by partnering with fintech. So we see a lot of mid-size and smaller banks using open finance and the API technology to plug in to fintech partners and make those products available.
Yeah, absolutely. And now, Todd, non-bank financial organizations, insurance companies, they do want to do this a lot as well. Is that true? First of all, maybe you could talk a little bit about that, but also, will that be leading to a lot of overlap in services, which is good for competition, is it, or just make it more confusing?
No, I think it's a great point. And we have to remember, Richard, that 50% of Filipinos are unbanked. So if we talk about Gcash, for example, or Paymaya as leading e-wallets or coins.ph, they are serving a customer base that may not be banked, and they're using their e-wallet as day-to-day online financial transactions. And the same goes for remittance companies. And we see the likes of Cebuana and Palawan now building basic banking and savings products accompanying their kind of branch network. So this is great. It's great for competition. It's great for introducing digital financial services to a retail customer base that may not even be banked yet. And I think in general, it oftentimes the non-bank financial service providers they don't have legacy infrastructure, so they can think kind of digital first about building new products and making APIs available to power fintech partners. So I think it's a great thing. When you say insurance companies, I think insurance companies are also starting to wake up to InsurTech and making insurance products available either through digital agents or through making fintech partners effectively their agent model, where fintechs can offer a marketplace of insurance products, or even just embedded into an e-commerce product themselves. So we're seeing a little bit of this unbundling too, where kind of the normal feet on the street model for insurance is moving online, and not just moving online, but moving distribution through fintech partners. Yes, it is. That is another big move. Todd, you mentioned you're based in Philippines, and I really thought you were based in Singapore. You seem like a sharp guy. You could be based anywhere. What's the deal with Philippines? I think 2022 is the year of Philippines fintech, and we've already seen some big investments. I think what's most exciting about the Philippines is, number one, you have the digital banks entering now with the digital bank licensing regime. You have the non-bank financial services leaders like the e-wallets really taking off. But you also have the Philippines, which is the home to the play-to-earn crypto economy, and of which there are supposedly more than 3 million daily active users. And so these are new unbanked population that are learning crypto as their first set of financial products. And so it's the merging of crypto and traditional financial services. It's non-bank fintech starting to compete with traditional banks, and just a lot of capital coming in to support new players and expansion of digital first fintechs. And so all of that's been coming together the last 6 months. Wow, that is okay. Well, Todd, we want to see you really do some great stuff here. It's nice to see, the country attracting sharp young guys like you doing interesting stuff. It's really going to make an impact. And if we could get that 50% unbanked number down to 5%, boy, that would be a great legacy to leave the world, if I can give you that kind of inspirational message. Thanks, Todd. Really nice to have you with us, and keep up the fantastic work you are doing. Thank you so much. Have a great day, everyone.